So this is a panel on artificial intelligence, and obviously we've heard that word way too much over the last couple of years, but the word that you might not have heard about, which is a little bit aggressive, is this term called a useless class. And it was derived from a reading from a book called Sapiens by an author by the last name of Harari, and he talks about the fact that in the 20th century, you could go from being a farmer to a cashier at Walmart. But guess what? Both the farming and the Walmart cashier are going to be taken over by machines. So what do you do with this class of people? So that's ultimately where we're going to end up in this conversation. But we're going to have a little bit of fun on our way over there. And I think we have some very, very exciting people that are going to go through and talk a little bit more about that progression of where we are now, where we're going in the future, and this potential dystopian future of a useless class of humans. But so I'm the moderator. Matthew Dixon is with us. You might have seen his presentation, a very sophisticated analysis of what is machine learning. He is with the Illinois Institute of Technology. We have Igor Halperin, who is NYU Tandon School of Engineering. You can look up on the screens to identify exactly who each of the individuals are. And we also have Sara Castellanos, who's with the Wall Street Journal and who reports and talks with a lot of people in the artificial intelligence world. So she's going to keep us honest in terms of what we're saying and what's really reality and what people are talking about. We're going to structure this in three different sections. First of all, we're going to talk about we're going to level set everybody, because I think in this room you have a lot of people who think of AI as different things. Is it AI for the public markets? Is it AI for the financial markets? What are we talking about when we're talking about artificial intelligence? So we're all going to have a chance to talk about what is artificial intelligence. Then we're going to move on to the impact of this artificial intelligence on the different sectors of society, and where do we see this going in the future? And then once we get all that out of the way, then we're going to sort of postulate about what's going to happen to this useless class, and what is the useless class, and are we setting ourselves up for a huge challenge in the future, and we'll see how that happens. So let's get started, and let's start with Igor. Igor, why don't we? I'm going to ask each one of the panelists to tell us what their definition of artificial intelligence is. We're going to dig a little deeper, and then we'll go into the future. So, Igor, why don't you give us your definition of artificial intelligence?
The definition is very simple, actually, and it's stated in the most classical textbook, which is called Artificial Intelligence by Peter Norvig. And the definition is that artificial intelligence deals with intelligent agents. So now, to make those intelligent agents, artificial intelligence has to address a number of issues. And the first one is to make robots able to learn from data, from raw data. And this is the topic, and act optimally. And this is the topic of machine learning, which is more aligned with my own research. But artificial intelligence in general is much wider topic, and it deals with many other topics. For example, natural language processing is AI, but it's not machine learning. And there are some other topics there. For example, abstract logical reasoning is also a topic of artificial intelligence.
Okay. All right, Matthew?
Yeah, I think I would add to Igor's classification and say, when we're talking about machine learning, we're really talking about three different areas. Are we talking about unsupervised? Are we talking about supervised? Or are we talking about reinforcement? And those are various different ways of discovering patterns, learning from the correct answer, us telling the machine what the right answer is, or a system of penalties and bonuses or rewards for solving some kind of optimization problem. So all three of those things get lumped under machine learning.
Okay.
I think I would simplify it a little bit more. AI has obviously been hyped up a lot. Every company basically in the world is saying that they want to use some sort of AI for something. I would define it as any technology that tries to mimic human thought or human action, and it's been in the news a lot lately because of advances in technologies, including cloud processing and big data, use of big data. And then I would say a couple branches that are widely talked about are natural language processing and machine learning.
All right, good. That's a good level set. This is a little cartoon that I found, which you might, on the one hand, it's humorous, but on the other hand, looking into the future, is there really a place for humans? So take a quick look at that. And while you're looking at that, now that we have sort of a definition from our three panelists, I just want to point out a couple of statistics and why this is important for all of us here. AI, this is a McKinsey report that came out last week. By the way, if anybody wants a copy of this, I'm happy to send it to you. But some very, very fascinating comments came out, and I just highlighted a few of the comments. AI adoption will add $13 trillion a year to the global production, the report said, and an average of 1.2% to global gross domestic product per year. So these are some big numbers. Those that embrace AI will see double their cash flow by 2030. Those that don't embrace AI will lose 20% of their revenue by then. Now, this is also very interesting, and you might say, okay, I hear a lot about AI, but I don't really see it. The world is in a deceptively quiet period in which some companies and countries are aggressively developing and applying early rudimentary models of artificial intelligence, but the impact is not visible. Now, what's interesting, I saw a report that came out of an interview with Putin from Russia, and the comment that he made was the country that is best able to embrace and leverage the benefits of artificial intelligence will lead the world. This is very interesting. The AI revolution will arrive almost imperceptibly. So just because you don't see it happening, it doesn't mean it's not. But still faster than prior big technology shifts because the intense global competition and the breadth of its reach. By the second half of the next decade, a few players will be conspicuously ahead of rivals, and by 2035, there will be a clear winner and loser among countries, companies, and individuals. The dividing line will be defined by those who took the coming age seriously and prepared for it, and those who were passive. This, I think, is the most influential. This is very interesting. The era's winners will be those who are not fooled by the absence of visible change, as we said, from AI over the next 5 to 7 years. By the time the fruits of AI investment become clear after 2025, it will be extremely difficult to compete with the leading players. By 2035, a lot of the game will already have been played. So if you're interested in this report, I think what that does, it behooves all of us to look at AI seriously and incorporating it into our operations. So, Matthew, prior to this panel, we had a few discussions, and Matthew, I have a couple of questions for you. Is AI making us smarter? This is another. We're still delving into where we are with AI. Is AI making us smarter? In other words, has AI actually led to any great discoveries in finance, or is it just a play on doing what we do better and faster?
Yeah, well, I think the answer to that is, I can answer that directly and indirectly. I think all of us in this room who've dabbled or aggressively sort of deployed AI have gone through the process of systematizing data construction, data collection, removing bias. And AI has sort of forced us in a way to think about how we feed the machine and what novel sources of data we can use to extract novel sources of alpha and so on. So I think indirectly it's forced us all to sort of evaluate what were previously fairly sort of fragmented, highly manual research processes, and to be thinking more about how do I systemize some sort of mindset or social structure within a research group? So that's important. That's number one. Number two is, I think it's making us aware about our own cognitive biases. As we think about what input should go into a model, and what sort of, how can we try to remove that sort of intuition which could be holding us back from being able to adapt to market regimes that we haven't seen before. So machine learning is sort of pushing us, if anything else, to be thinking about how do I build input and how do I get input data that is really biased from my own subjective viewpoint, my own investment thesis. And I'd say 3 is there are novel studies now at a pan-market level coming from the academic research, that's where I'm most familiar, where we're seeing evidence of certain universal laws appearing in markets. For example, Ramakant, Justin Sirignano's universal law of limit order books, where we do see a very systematic relationship appearing between the liquidity in the order book and price differences. And there are countless examples emerging where they've been able to scale up the data sets and really push the sort of the boundaries on what we can say about the market data.
That's good. You mentioned the 3 different types of learning. One of them was reinforcement. I think Igor has done some work in the reinforcement learning. Igor, can you tell us a little bit more about the different types of machine learning and how does reinforcement differ from other types of reinforced learning? What are some interesting applications of reinforced learning?
Yeah, certainly. So reinforcement learning is my favorite topic in all of machine learning, and for a very simple reason, because reinforcement learning goes to the core of, in my view, goes to the core of all issues, or nearly all issues that we have in quantitative trading. The point, the main task of reinforcement learning is to act optimally, right? So this is the prime task. Now the problem of predicting the future is a secondary task. Most of work in machine learning, in supervised learning and unsupervised learning, deals with just this task of predicting the future. But predicting the future, first, may be very complex, and second, may not be strictly necessary in order to act optimally. So reinforcement learning is just about acting optimally. And where it can be used practically everywhere in all, or nearly all tasks of quantitative trading. So portfolio optimization is a classical problem for reinforcement learning. Option pricing and hedging is also another classical application of reinforcement learning.
Okay.
So it's everywhere.
Good. In talking about artificial intelligence, Matt, what do you think are the biggest conceptual aspects that we are currently missing when we talk about AI in investment, trading, and risk management? So specifically in the financial industry, what are we missing?
Yeah, I think what I see is you've got 2 different worlds right now. You've got computer scientists and engineers coming through, which are the talent pool. They get hired. The Citadels and the other big quant shops. And then you've got the traditional trained portfolio managers, who know who pharma is and French and so on, and familiar with efficient market hypotheses. In other words, are grounded and trained in financial and investment theory. And there's quite a bit of a gap between those 2. In fact, I'm pretty certain often those people don't really talk to each other. In a lot of workplaces in any meaningful way where they're trading or they're transferring knowledge. So I think what we're going to see is instead of mean variance, Markowitz type portfolio optimization, or just using Black-Scholes, for example, for pricing derivatives, we're going to see those popping out of machine learning frameworks as special cases. In other words, machine learning is going to be the generalization of all this stuff, all this good stuff that we got taught in business schools and finance. And those models that we use are going to be the special cases. And I think we haven't quite got there yet. But when we do, I think machine learning will have truly triumphed in the areas of quantitative finance. At the moment, it's still used a little bit too much just for prediction and looking for patterns in data. It hasn't quite resonated with the sort of upper echelons in finance that actually machine learning is really a generalized decision process. It generalizes even your dynamic programming, it generalizes your derivative pricing models, it generalizes even your risk management models to move away from one of these data assumptions.
Matt, did you want to say something?
Yeah, I completely agree with Matthew on the point that traditional financial modeling is actually nothing but a special case of more general data-driven reinforcement learning approach, which it can be considered as model-based reinforcement learning. So if you take the most classical case of Black-Scholes model, right, from the point of view of data requirements, it only needs 2 data points, right? The current stock price and the stock volatility, and that's it. So in some way, pretty well-defined way actually, you can view it as a limiting case, as a model-based reinforcement learning, just this.
Okay. Matt, we talked a little bit about advancements in the theory of AI, and it's not just a black box anymore. What did you mean by that? As theories are advancing, they're not just a black box.
Yeah, I think I touched on this in my talk. I'll just say it again if you missed the talk. I think I think the goal is to sort of eliminate your there are unknown unknowns and then there are known unknowns, and treating a black box as essentially either an unknown unknown or as a known unknown. You just have no idea what's going inside, but at least you don't know. At least you are claiming that you don't know what goes inside, so it's a known unknown. Is I think somewhat confusing, and I think if you look inside it and simplify it, you're always going to find something you already knew. And I think that's how we learn naturally. We always like to associate new things and park it in what we already know. And to somehow think of machine learning as something incredibly different that doesn't relate to what we already know, I think is going to be a little bit confusing and almost an unscalable task. I see a lot of quant shops running support vector machines, neural networks, every single classifier under the sun head-to-head in a horse race. And reality is, well, actually that thing's really the same as this thing. So let's just make sure that, under control test, where we know these things are all the same, they produce the right answer, and then we'll take it from there.
Sara, you talk to a lot of companies, a lot of financial operations about artificial intelligence, and obviously you write about it, you present it in the Wall Street Journal, and we read it, we consume it. But in some of your talks, maybe some of the things that you're not printing, what are the financial experts that you have access to? What are they telling you about AI, the future of AI, and their actual implementation or empirical evidence that it's working or will work? I mean, just give us sort of an overview of what some of your conversations have been.
Okay, so I have a few concrete examples, but basically I'd just like to point out that I cover emerging technologies, including AI and not limited to AI, at Fortune 500 companies. So I see a very high-level view of everything. A couple of interesting things come to mind. So Capital One and Bank of America are both experimenting with AI-enabled chatbots. These are chatbots that can converse in natural language. They can do tasks for consumers. They can check account balances. They can pay bills, send alerts, fraud alerts, that kind of thing. They use really advanced natural language processing to understand the intent behind all of these consumer requests. And what's actually really interesting, I think, about this is that they're building these chatbots in-house, so with all in-house software development. Capital One actually has 9,000 IT professionals that the CIO is overseeing. So that, to me, says that AI is becoming a really competitive advantage, and also AI-enabled software is becoming just like the bread and butter of all of these banks and financial institutions. Bank of America has recently launched an effort to research explainable AI, this whole black box issue. So there's a lot of research going on at these companies as well. Morgan Stanley is studying how AI could help offer better trading and investment decisions. And I just recently wrote a story about NASDAQ, which has built an AI system that helps analysts write portions of financial reports. So, I mean, it's pretty widespread, but it is sort of at the early stages right now. They see a ton of promise in it, and they're investing very heavily in it. But at this point, it's still pretty early.
Okay, and that's sort of narrow AI, very specific applications.
Exactly.
In the banking world, not so much on the trading side. So I think we covered where we are with AI. Let's talk a little bit about where we're going. Igor, what do you think is going to be the next big thing in AI and machine learning technology. We have a pretty good idea of what's going on right now from what we can see with what banks are doing. Obviously, they're incorporating more and more into trading, especially high-frequency trading. But where do you see the future of AI, and where's it really going to have the most impact?
Well, in this sense, we already see the start of this new era of wide adaptation of machine learning and reinforcement learning in financial industry. When we talk about finance, we can differentiate between what is called quantitative finance trading and all the rest in financial industry, banking and mortgage businesses and all these other things. They on the path of wide adaptation of machine learning. But I personally see that reinforcement learning, which I already mentioned, has a huge potential. We just starting to apply it for quantitative finance. We just starting to apply it to learn preferences of market participants, of customers, etc. So all these tools which were initiated in such fields as robotics make their way to finance, but they need to be adapted to needs of finance. If you just blindly take them and try to apply in finance, it most likely will not work, and it does not work, because finance is a very specific topic. So my expectation is that machine learning and in particular reinforcement learning will be the next big thing in finance.
The reinforcement learning, okay.
Yes.
Matt, do you have anything to add to that in terms of where you see the most impact being felt with AI?
Yeah, I think we've got to look at the sources of innovation. I mean, we've got this, Silicon Valley sort of crossover. So anything that Google is doing, or Uber or Lyft, potentially once it's made open source, and they're releasing a lot of open source tools, it's very impressive in terms of even probabilistic programming languages and environments that we could use in finance. But I think, so we've always got to keep a window there, an eye on that. And then we've also got to look at, of course, how we, researchers and, the kind of tools and things that are built either through vendors and the areas of research there. Interestingly, Michael Kearns, a professor of computer science at Penn State University, built and applied reinforcement learning to algorithmic trading about 10 years ago. He even set up a quant trading shop with one of his Russian students, and it failed. They lost a lot of money, and they went out of business. And so, the question is always what would be different this time? How much of this is going to translate? And I think where we are now is we have a lot more, we have alternative sources of data. Our advancements, understanding of the advancements in the technology have really improved. And there's a lot of things that, if we go back to Michael Kearns' work, and of course there's no indication why Michael Kearns should be representative for the entire field, but there are many things that have, in terms of the technologies, our understanding, the way that we sample, there's a lot that's happened in the last 10 or 15 years, an explosion of growth in areas of prediction and uncertainty that we can really borrow and use in finance and in reinforcement learning. So I'd say that we really are in the precipice of adopting tools and techniques. So OpenAI's GIM, the Elon Musk company, funded company that is the basis for Atari Go and so on. You can take that and build Q-learning algorithms, which are very good for, say, execution. You probably don't want to use that for long-scale, sort of long-horizon type of investment decisions. So I think we're finding the types of areas where it makes sense to use this application. Probably doesn't make sense to use it for market taking. Maybe it's more for market making. Maybe it's more for certain types of market which are very liquid. So we have to figure all that out. And that's not in the public knowledge. And so I think that's where we're going to see a lot of the siphon of what's going to be relevant for us in machine learning in the future. And of course, just keep an eye on what is going on with prediction in Silicon Valley. They're doing some incredible work, sequence-to-sequence models. And I think it's going to be very interesting to see a lot of engineering departments applying these problems to financial data sets. As data sets become public, through various different data vendors are making public data sets or data sets accessible to academics. And the advantage being that then you as an investment firm can reproduce the results in academic papers. Wouldn't that be a thing? Well, I think that's going to happen. We're going to have open source data sets, and you're going to be able to transfer and replicate the studies much more efficiently so that we get this stuff out of the door from innovation centers like universities and adoption into universities.
Well, there's a lot of work. Some people are saying it's happening too fast, and people might actually start rejecting artificial intelligence because it's, we heard what Elon Musk has said about it. We've heard about what some academics have said about artificial intelligence, and there actually might be a pushback on the part of certain individuals, the general public at large. But it's interesting. We said earlier that a lot of the AI development is done behind the scenes. There is actually an article recently that appeared last, I think it was day before yesterday, about Samsung. And to further impress the investments that are being made, Samsung is investing $22 billion in artificial intelligence and hiring 1,000 AI experts in the New York area alone to work on AI. And Sara, I'm sure you've seen articles like this. Do you see more? When you talk to these executives, do you see them showing a lot of enthusiasm, ready to allocate capital towards the evolution or development of AI in their companies?
Yeah, absolutely. I'm seeing major investments in AI happening all over the world. An interesting fact from Gartner that I thought was relevant, this whole field of AI augmentation has become really it's burgeoning right now. It's the whole idea of AI software systems working with humans. And in a lot of cases, this is what these banks and other companies are trying to do with robotics process automation, basically kind of taking over the mundane tasks from human employees and allowing human employees to actually do more of the customer face-to-face interactions. That's actually gaining huge amounts of traction. I wrote a story recently about AT&T, Walmart, and Ernst & Young, who combined have over 1,000 RPA software robots. Not all of them are artificially intelligent, but most of them are. But so Gartner says that in 2021, AI augmentation will generate $2.9 trillion in business value and recover 6.2 billion hours of worker productivity. So obviously, this is a huge area of investment for companies specifically because of that.
Right. I don't know if Sara, if we can bring up maybe one of our first questions on Silo, and we can do a little participation. Okay. So are you currently using any form of AI? We're trying to find out whether or not there's what we're talking about is as exciting or as used as much as in our audience. Okay, so are you currently using any form of AI, machine learning, deep learning, NLP, within your company? So it looks like, okay. So this is probably music to your ears, or you know that this is happening. Maybe we're giving you a little bit more detail on it. Could we go to the next question as well? And that's what I was hoping. Are you planning to implement, okay, for those of you maybe who are not so advanced in your development of AI, are you planning to implement AI technology within your company within the next year? If you already are you increasing it? And if you aren't, are you going to? Okay, so we're not telling you a lot of what you don't already know. So obviously there's a lot of excitement in this room, and usually technology leads in the financial world. So what I'd like to do now is move to sort of the third part of what we're talking about, and that is the human aspect of artificial intelligence and the creation of this useless class. And getting back to you, Sara, what skills will be needed as AI becomes more pervasive in finance? Now we're talking about how we're going to displace workers and what to do with those workers. So how do we envision the relationship between humans and machines? Many firms and analysts say the big value in AI comes when it's paired with human workers in what's known as an AI augmentation. I think you've done some analysis on that. And okay, you talked about the $2.9 trillion in business value. Do you have any other? Is that basically what you're?
Yeah,
out?
that's the main stat that I have. But yeah, I mean, everyone that I talk to in terms of who's actually researched AI and who's studied this entire area has said that bots will be the ones to basically analyze large quantities of data that are beyond the grasp of human capability, and ingest that and be able to mine for insights very quickly in near real time. And then the humans will be left to do a lot of the creativity and a lot of the communication. Human-to-human interpersonal relationships are going to be huge. Intuition and instinct is always going to be needed. These are things that really can't be replicated by bots. If we do get to a point where there is what's called general artificial intelligence, then potentially it can be replicated. But I was just speaking with Andrew Ng, who was the former head of AI research for Google and for Baidu, and he said that general artificial intelligence probably will happen, but it's very unclear whether it'll be in 100 years or in 500 years. So as of yeah, that's a widespread. So as of today, it's going to be imperative that we train and educate our fellow humans on these ideas of creativity and kind of maintaining this idea of instinct and intuition that is currently right now.
So if you're in a face-to-face interaction type job, you're probably guaranteed a certain amount of job security. Is what you're
potentially,
saying.
yeah.
Okay.
Interpersonal relationships are going to be really key.
Okay. Matthew, we had some conversations, and you talked about what are the jobs that are going to go away? What are the jobs that are going to be relevant, and how should people prepare for the onslaught of the automation of a lot of jobs? Could you give us your perspective on that?
Yes, I think if we look at Ray Kurzweil's view for a moment, because I think it's an important one. I mean, the median, and there's a wide distribution here, on human processing power is around about 10 to the 16 flops. So that's about 10 petaflops. That's, to give you an idea, that's around about 10,000 times more powerful than a GPU right now. So your brain, your raw processing power is around 10,000 times more powerful than one GPU. Maybe at the very high end of a GPU or a very high-end Intel CPU, maybe 1,000. But certainly, in terms of your raw processing power, and this goes for someone who is maybe blue collar and doesn't have the right skills, there is still a remarkable amount of processing capability. Now, whether that's used or whether it's redundant is an entirely different matter. But I think the real question around that we have to be thinking about is adversarial attacks. We've already seen how easy it is to fool machines into thinking or making the wrong decision. As an example, with a panda bear, and just replacing one pixel, it gets completely the wrong interpretation of the image. So I think with cyber attacks on the increase, we're going to see some pushback from more widespread AI adoption, and I think there will be some hackers who will be wanting to be pro or against, and they'll have more of an impact. And I think we're already seeing it now. So more shifts into fintech, more shifts into data preparation, data processing, more hires maybe in India and places like that, where there's a lot of sweat and muscle that goes into preparing the data sets. And what we don't talk about here is just how intensive it is to build these models and train them and get it right. If you've ever gone through the process of building a training strategy based on AI, it's a lot of work. I mean, at the end of the day, it's being automated, but it is a lot of work. And so I think that we'll see more and more humans involved with trying to streamline that process. And so clearly, some tasks are very pertinent to being automated. We've seen buildings being constructed in Japan by robots, prefab buildings. Other tasks, the environment's changing a lot. And it's difficult for a machine to fully adapt to those circumstances, at least at speed. So I think we'll see, gradually a sort of a task or a scale emerging of what areas or tasks are easily replicable by a machine. I mean, we sort of have this with the Turing test already. But I think we'll see that becoming more granular, and in doing so, we'll see adoption commensurate with some sort of measure of difficulty or complexity of a task or multiple tasks.
Igor, do you have a comment on that?
Yes,
And how this is going to progress?
I think it was Andrew Yang, whom you mentioned, Sara, who said that the process of replacing human labor by machines actually starts with tasks which have a very short time horizon. So everything which requires planning for at the range of a minute or under a minute is already automated or is going to be automated very soon. So what it leaves for us humans are several types of activities, I think. One is that I recently came across a paper which said that surprisingly salaries for bank tellers in tri-state area recently went up, right? Even though ATMs are everywhere, nevertheless, human touch, which you mentioned, is important apparently. So when you go for a loan, you better want to speak with a human, right?
But do you think do you think that's a function of age? Do you think that those
Partly,
who have
yes.
always, once the current generation that grew up with interpersonal interactions with their bank, when they're gone and the millennials take over and are the predominant society, do you think those bank teller jobs
there is
are going to pay
definitely
less?
something to that, to your point, right? I know that newer generation is more comfortable with electronic readers than with physical books. So there is a tendency to this. How far it will take us is not clear at the moment. But I just want
But
to
I think
continue.
that's fascinating, that bank teller jobs, the face-to-face, Sarah, what we talked about earlier, is actually of value. Even though that's a very
yes.
simplistic job for a lot of people, people don't feel confident 100%
yes,
with
I
a
want
machine when
to-
they make a deposit.
Right. I want to suggest two more potential refuges, ways to escape for humans in their competition versus robots. Lately, lots of people talk about some sort of symbiosis between artificial intelligence and natural intelligence. So, for example, people do very interesting research when they take physical neurons from insects and then use it as a way to extract features and then pass it over to artificial intelligence. So I would, if you go wild, and then I could envision maybe in the future jobs of like cyborgs type of people. For example, you will be paid for implanting some, sophisticated chip in your brain, which will allow you to see very highly multidimensional financial state or something like that. Possible, why not? And finally, one last thing for humans to do is to actually teach the computers, right? So the society of the future will mostly be made of two types of people, right? So one type is who's serving the machines, and the other type who's teaching the machines, right? So we definitely want to be in the second group, right? As quants, as a profession.
Right, you want to teach the machines. You want to
Definitely,
be
yes. Personally,
in service
yes.
to a machine. Yeah, I think that makes sense. That's right. Well, okay. So what I mentioned earlier was this author Harari says, in essence, where machines take over all the simple tasks, so that you can't move from an agrarian farmer to a cashier at Walmart, because both of those jobs, all of the jobs, are going to be taken by machines. Where do those people go? What do we do with those people? Is there a minimum guaranteed income? Is there, what are we facing here? What is the dystopian future? And is it all going to happen at once throughout the world? Or, Matt, what's your perspective on that?
Well, I think as Igor mentioned, one of the roles is going to be increasingly sort of involved in the industry of training. So in other words, preparing the data sets. In other words, you're getting paid for taking pictures of cats and dogs and confirming that they're the right ones, just as you still complete those capture boxes when you have to fill in a form online or submit a form. So in effect, you're increasingly see the incentive to train machines by essentially confirming or providing some level of confidence in various different types of data that the machines will see. And I think, ultimately, when we step back from it all, we've got to ask, okay, well, how important is trust? Do I really trust a machine to pick up my child and take it to school? Do I really trust a machine if my life's at the end and I'm having a heart transplant? Do I really want that? How much am I going to pay extra to have a person be there, either to sort of guide me through the whole process? And I think we have to understand what the role of trust is. And I think in some situations it can be very difficult for us to do that. And so assisted care, as people get older, more jobs in care. I don't see old people being chaperoned by machines and having conversations with robots anytime soon. So clearly, the demographics are shifting towards longer age, life expectancies, and we see more people turning to care providers and areas where they're essentially taking up the role of that sort of emotional, providing emotional support, providing trust, and behind the scenes, the machines are doing all the heavy work and lifting, where trust maybe isn't such a critical face-to-face sort of issue.
Yeah, it's interesting. So one of the things that this report said that the United States and China are way ahead of the 41 other countries who have initiatives in artificial intelligence. So I can also see maybe the United States and China sort of leading the way, and then other countries doing the reinforcement, doing the study of the images, and then progressively. But isn't AI also limited based on the amount of data that you can feed into it in order for it to learn? And if we only have 1% of data that's out there in the world that's already been analyzed, processed, and categorized and made available to machines, do we still have are we still in basically the infancy of artificial intelligence relative to where we are with data and the use of that data? Igor?
Well, you raised a very good point, and it's a very important question whether we have enough data and whether we will ever have enough data. And my answer is we will never have enough data, just by essentially by definition. And when I say that, I mean some important data which is rare, right? Which you don't observe very often, but still it doesn't mean that it's not there and it will not bite you at the most inappropriate moment. So to give you a simple example, when you build equity models, right? You look into returns, right? And so you build your factor models or whatever by looking into returns. If in your data set a company goes bankrupt, you just remove it from the data set. So basically your models pretend that there is no such thing as a corporate default, which is totally not true, right? So from that point of view, corporate defaults are rare events which are critically important for almost nearly everything that we do in quantitative finance, except for very short-term trading. And nevertheless, most of our models just ignore this fact. So that's why I think this was the reason why all these models just crashed, that failed us at the moment when we needed them most during the financial crisis, because what we were observing was something that our models were totally unprepared for, right? Because what was happening is something that was not in the data they were trained on. So on this count, it's very important to add to whatever data we have our prior knowledge, our prior views of the world.
So are you saying that in 2008, a lot of these artificial intelligent or mechanical systems that were being run, rules-based systems, did not have the data of experience that markets are cyclical in a capitalist environment, and markets go down, markets go up, and it saw that, it just said, let's just sell out of everything? Or what data was missing in 2008?
What data is missing is exactly the data that was produced during these days, right? The data which is related to large market moves,
yep.
Right? So if we just look at the history of financial markets, the recent history, we more or less have exactly two data points which describe a crisis, right? It was the technological crisis of 2001, and then it was general financial crisis of 2007, right? So if you want to make your models better prepared for the next crisis, clearly this is not enough, right? So what it means that you have to add something to this, enforce your prior view, enforce your view that things can go bad and companies may default. If many companies default, that it's a symptom of a market in crisis, etc. So you have to add something. And this something can come through different ways, for example, as a Bayesian priors or some other arguments which appeal to human intelligence rather than blindly relying on data.
Okay.
So machine learning on its own, it's not sufficient. That's the point.
Okay, so that begs the question. We're in a credit tightening environment, which was one of the reasons why in 2008 we had a market decline. We're now in we're in that same environment right now. There are a lot of naysayers out there. There's a lot of doomsday scenarios that saying that our market is vulnerable, and it's only a matter of time before we see another, quote, correction or steep decline. Do you think the machines or our current investment processes are adequate? Are they adequately trained for what we went through in 2008? Are we facing the exact same thing, or have those who are programming a lot of these machines that are trading hundreds of millions of dollars prepared for the potential for this downfall? Matt, can you? I know that wasn't in our prepared speech, but what's your perspective on that? Are we vulnerable? Are the machines going to be better? They should be more ready based on information, but is that being programmed in?
Well, having spent time working at a big bulge bracket bank, the data collection, the different business development units is very siloed, and there are some sort of exceptions with hybrids and so on cross an instrument. Product structuring, but I think as long as business units and in other words, as long as a global risk doesn't sort of really delve in deep and ensure that there is much more cross fertilization across the data sources, we're not going to be looking at a really very realistic scenario. I mean, all the sort of techniques right now which are being used by banks, as in Europe is required by Basel III, so economic capital, tier 1 capital reserves, none of those are based on any kind of artificial intelligence, all based on historic covariance matrices under some sort of stationarity assumption, and it's just not a data-rich type of metric for defining how much capital reserve you need. So I would say that I'm somewhat bleak that we're not going to see that the AI has really been pervasive in terms of risk management, market risk management of banks, and that is still something that we've really got to deal with.
Do you agree with that, Igor? Do you think so? The machines are not going to save us from our next downturn.
Totally, yes, I totally agree. Yeah, that was more or less my point. Yes. What we may hope, though, is that our models that we build using artificial intelligence, using machine learning, will be more robust. And if they're not able to save us from the next crisis, then at least they would perform a bit better than the models that we had before, because they will be more robust. Because we embed there our prior view of likelihood of such things.
Sara, when you're talking to financial executives, is there any? Are they exhibiting any apprehension about future markets, or is it steady as she goes? We're just going to keep working, and as long as the music is playing, we'll keep going around the chairs.
I don't usually talk to them about markets, but there's definitely a little uncertainty, a lot of uncertainty, honestly, about how AI is going to impact whole industries. I did want to go back to jobs really quick, though. I have a couple points to make. McKinsey has a report that came out, I believe, last year that said that certain categories of jobs will be easily automated. in the age of AI, such as physical activities in highly predictable and structured environments, as well as data collection and data processing. And then they also said that 30% of activities in 60% of all occupations could be automated, meaning most people in the future will be working alongside robots. And then they have a really grim stat that says 400 million workers could be displaced by automation between 2016 and 2030. But I did want to bring up the point too that jobs have been displaced for generations, and we are constantly, finding other things to do. Who would have thought that there would be social media influencers? People would be paid thousands and thousands of dollars to take pictures of their cats and post them on Instagram. Or like people maintaining mainframes these days have mostly gone to cloud services and that kind of thing. So I think that, it's not unreasonable to kind of expect that there will be a whole new class of jobs that we can't even imagine.
Okay, so you're saying that the economy will find a way.
Yeah.
It's not really a dystopian future, but there will be solutions that will be found.
I think so.
Humans are resourceful. Susan, do we have another, I believe you have another question. We have about 7 minutes left, so maybe we'll get to these questions and then wrap it up with some questions from the audience after we finish these questions. Okay. Have you or somebody you know lost a job to an AI system?
Good segue.
No. Okay. So basically, the impact is not being felt yet. Okay. So that's good. And I think we might have. Do we have one more question? We have one more. Do you think AI will help mankind or ultimately have a negative impact? I think there was a question like that earlier. So I think if it's used correctly, yes, we'll have a. So pretty overwhelming, enthusiastic about AI. Okay, so we have a few minutes left. Armando, should we move to any questions? And I'm looking around, I don't see anybody with their hands up. Oh, there is somebody. Yes, please. Malcolm?
No, it's Henry, by the way. Thank you
What's
very
that?
much.
What's
Very
that?
interesting. Henry, not
Henry.
Malcolm.
Okay.
How are you?
I'm doing very well. Thanks for asking. Very well, Henry. What's your question?
Yeah, sure. So, very interesting presentation. So, a lot of been talk, the type of jobs that's going to be phased out. Can you talk about? I think Susan, right? I think
Sarah.
You
Sarah.
Sorry, Sarah.
It's okay.
That's Susan
It
over
was a little
there.
bit far away with the
With the
screen.
blonde-
so I
the
thought it
blonde
was
hair.
SAR. But anyway, to make the story short, I think you talked about the new job in the new era was social media influencer, right? Can you talk about with the new era with AI, what type of new jobs will be creating instead of phasing out? Thank you.
Yeah, I wish I had a crystal ball to have an answer for you, but I think that there will be a whole class of people who are going to oversee bots, including software bots and actual warehouse bots. Managers of bots are going to be highly needed. But Andrew Ng, I had this conversation with him on Monday, and I asked him the same exact question, and he said that there are going to be so many jobs that we literally can't think of right now because it's just kind of uncertain. Going back to that uncertainty, I mean, it's really kind of too early to predict. So unfortunately, I don't have a better answer for you.
Okay, fair enough. Okay, you want to take that, Matt?
I'll just add to that. I mean, we've also got the shared economy, democratization or digitalization of shared services. And so, that's another example where AI has essentially opened up and made people who would otherwise been employed, it's giving them a source of income. Now, it's not clear whether there is, I could throw that question back at you and say, is the emergence of Lyft and other ride-sharing services ultimately going to result in polarization of capital distribution? Because that's a classic example where that service is available for millions of people if they want to make extra cash. In many ways, much more flexible and gives them more time, perhaps maybe even live a happier life. So I would argue that we're going to see certain types of economic regimes appearing which are facilitated by AI. Digital services and also the shared economy is a good example.
There's a question from the audience. In 25 years of the information technology revolution, the concentration of wealth has widened greatly. Will AI exacerbate the trend favoring owners of capital? I did read in my studying for this panel a very interesting comment, which was, we will increasingly see a polarization of the haves and the have-nots. And those that have, and those that get the education, and those that have access to information, and those that have access to the technologies that Igor mentioned earlier, implanting chips or whatever, I think that's a little bit far, getting closer to the singularity, but there will be, and I think Harari talks about this, where there will be an Überklasse, an Übermensch, a superhuman type of individual who has access to resources, and then there will be the absolute useless class who do not have access, who don't have the financial resources, the intellectual resources, maybe they don't have the GPUs that we were talking about earlier, Matt, that are able to switch to different job responsibilities and process information to be competitive in a competitive world. So what I've been reading is there will be a widening and an exacerbation of this trend. Igor, do you agree with that, or do you think that
Well,
it will narrow?
Personally, without understanding economy as a whole, I would say that I like the idea of guaranteed minimum income that Elon Musk, I think, suggested to tax robots, right?
So the guaranteed
if
minimum
they are as
income-
smart as we expect them to be, let's just tax them and provide, the guaranteed minimum income to all the rest of people.
Right. Well, they've tried that. There are a
Yeah.
couple of European countries that have tried the guaranteed minimum income,
Right.
and they've canceled it after 2 or 3 months. I don't know
Oh, yeah?
what happened or why it didn't work, but maybe there's something there.
I just
And
read Switzerland adopted this recently, now, essentially. I read it the last week.
Okay, there's a new one. Okay.
Yeah.
So I can see how guaranteeing a minimum income in cash is probably not the answer, because you're going to go out and spend that cash for whatever you want. But maybe if it's a guarantee of a small apartment, maybe some transportation, and the ability to achieve revenue above that by doing menial tasks and being paid in crypto that you can then turn into something else, okay, fine. That's a way, that might be a cheap way to allocate some kind of benefit from doing something. Do you have a comment on that, Sara?
Well, I do think that there's a bunch of people and researchers, and including vendors, who are focused on the idea of democratization of AI. And I honestly think this is probably just my own opinion, but I think it's widely shared, is that the winners of this AI revolution are going to be the ones with the most data. So we obviously see that in action right now with Google and Facebook and,
Gotcha. Okay, I know, Armando, we're supposed to get off stage, but this is a very interesting question. There's a notion that the next crisis, which we addressed earlier, will be that of a liquidity crunch as we see the interest rates rising. As a regime shift will cause HFTs to pull the plug. So we obviously have an anti-HFT person in the audience. Cause HFTs to pull the plug and step out of the market. Are there any thoughts? Matt, do you have an answer for that one?
I mean, I can only speak within the context of AI. If you're market making and you're using AI.
This is probably Herb Blank's question.
Yeah.
read Herb Blank's question before.
I mean, those algorithms are, designed to cut off, if there's stop you getting run through in the market. So I could see how systematically, if every shop is using an AI agent to execute, then it's going to potentially not quote as a market maker if there is a sort of extreme liquidity imbalance in the book. But it's very hard to say, for me personally, to answer that question.
Okay.
Yeah.
All right, so listen, look, in summary, I think we did a pretty good around-the-world trip of artificial intelligence. Susan, did you have a question?
We just have one more, if that's okay. Really quickly.
Oh, Herb. Herb Blank from Quaff a Few. an industry veteran in the quant world. Yes, Herb.
Yes, getting back to the financial crisis, the copula model from Francis X. Lee was not real artificial intelligence. It was using or making assumptions that diversifications during non-stress would continue to be diversified during stress period, very similar to asset diversification not holding up during periods of stress. Now, AI, as I understand it, would be a combination of decision-based rulemaking with the ability to change those rules and change those rules and change those rules as it comes up. The closest I know of that today is a Watson kind of thing, but so far I don't think anything quite that sophisticated has been used for major decision makings in financial houses. Do you know of any?
I mean, I can speak to, used in financial houses, I have no idea. But in terms of AI versions of copula models, we are starting to see Gaussian processes, and those are able to model the dependent structure in the data in a more dynamic way using machine learning, not using all the assumptions, the horrible assumptions that go into that copula model. So who knows? We may see that, but is that robust enough? Is that being used in-house? Are there additional rules and decisions being made? I don't know.
Neither do I.
It sounds like a good idea relative to what's going to happen. Okay, I think that concludes the artificial intelligence panel and the future of a lower useless class.
This is Raven Pack.